come on here because I saw something on CNBC today that I think is a topic that is worth discussing. So the topic is about SpaceX IPO and how a lot of the exchanges like NASDAQ and a lot of the indexes are changing their rules to make sure that SpaceX can be included in their indexes. And a lot of people are upset about this, especially about the S&P, because the S&P has historically had a rule that in order to be a member of the S&P 500, you had to be a profitable company. Now, I think it's a really good reminder about what indexes are. Somewhere along the line, people have begun to believe that these indexes were meant to help them pick good stocks. And that's actually never been their purpose. The reason indexes existed prior to them even being investable was to provide a broad representation of the stock market in a certain country or of certain types. Like it's the Dow Jones Industrial Average, because at some point it was just industrial stocks. Now that changed over time, but you catch my drift. So if you invest in these things thinking that there's some protection against you, that they screen to make sure companies are profitable or screen to make sure they meet certain criteria, you would be very wrong. And the reason a lot of these firms are making these changes to their index requirements for inclusion has to do with the fact that over the last 10 years, IPO markets have largely been driven by companies that have stayed private really, really long. And when they come to market, they are like fully developed companies. They're mega cap. And so they are actually a big representation of the public markets. So SpaceX, when it becomes public, will be the 10th largest stock in the S&P 500. The S&P 500 requires that the stock be actively traded for 6 months before inclusion, but they remove their profitability metric. This is an important reminder that indexes are not meant to make your life as an investor easier. They were always meant and will continue to be a way for people to get a good understanding of the broad market value of publicly traded companies. And that's it. That is it. So the more you know. Also, another quick reminder, we call them passive indices. Important reminder, they are not passive. If your expectation was they had rules, somebody made those rules, and some committee actually execute those rules, and some committee can change those rules. So they are actively managed. Maybe not to the same extent that most people identify as active management, but they are very much active.